Sorry, that was a little too loud. If you had your earpieces in already, I apologize. It's like a wake-up call, maybe. This is meeting number 71 of the Standing Committee on Public Accounts, Tuesday, October 17th, 2017. And I would remind everyone this morning, committee members as well as those in the audience this morning, that we are televised. And I would just tell you that so that you would please shut off your telephones or your communication devices. I haven't got mine off yet, but I will as soon as I'm finished this. This morning, our committee will continue our consideration of the public accounts of Canada 2017. As our witness, we have from the Office of the Auditor General, we have Mr. Michael Ferguson, the Auditor General of Canada, Ms. Karen Hogan, Principal. From the Treasury Board Secretariat, we have Mr. Bill Matthews, Comptroller General of Canada, and Diane Parasini, Executive Director, Government Accounting Policy and Reporting, Office of the Comptroller General of Canada. Also from the Department of Finance, we're pleased to have Paul Rochon, Deputy Minister, as well as Nicholas Leswick, Assistant Deputy Minister, Economic and Fiscal Policy. We have an opening statement this morning from the Auditor General and Mr. Matthews, the Comptroller General of Canada, before we proceed to questions from the members of Parliament and our committee. And so we welcome our Auditor General back, and we look forward to your comments, sir.
Thank you. Mr. Chair, thank you for this opportunity to discuss our audit of the consolidated financial statements of the Government of Canada for the 2016-17 fiscal year. I'm accompanied by Karen Hogan, the principal responsible for the audit. The consolidated financial statements are a key government accountability document that can help parliamentarians understand the results of the government's financial transactions. The consolidated financial statements for the fiscal year ended 31 March 2017 showed that the government's operations resulted in a deficit of $17.8 billion. They also show that the government's 31 March 2017 financial position included a net debt of $714 billion. Net debt is the amount by which the government's liabilities exceed the value of its financial assets. Le Contrôleur Général répondra.
Controller General will answer questions about the preparation of the consolidated financial statements and about the public accounts of Canada. We will answer questions about our audit opinion and on our observations. Our independent auditor's report, our audit opinion, is on page 2.4 in the Volume 1 of the Public Accounts. We assessed the consolidated financial statements against generally accepted accounting principles for the public sector. We found that the statements conformed in all material respects, which means that you can rely on the information they contain. Not many national governments receive an unmodified audit opinion that its financial statements conform to an independently established set of accounting standards. However, the Government of Canada has accomplished this for 19 years in a row. Volume 1 of the Public Accounts also contains other financial information, such as the audited financial statements of the Employment Insurance Operating Account in Section 4 and of the Canada Pension Plan in Section 6. I would like to draw your attention to our observations, which are on page 2.42 of Volume 1. In our observations, we bring 3 matters to your attention: pay administration, discount rates used in estimating long-term liabilities, and National Defence's management of its inventory. I will briefly address each of these matters.
The government's Phoenix Pay system processed approximately $22 billion in salaries and benefits in the 2016-17 fiscal year. As you may have expected, we found deficiencies in the government's internal controls for pay expenses, which meant that we had to do more detailed audit tests of those expenses. Instead of relying on internal controls, we had to recalculate 18,000 pay transactions for 263 employees across 48 of the 101 departments that use Phoenix. We found both overpayments and underpayments to employees, and 62% of the employees in our sample were paid incorrectly at least once during the year. Although there were a significant number of errors in the pay of individual employees, these didn't result in a significant error in the amount the government reported as its total pay expense in its consolidated financial statements. This was because the individual overpayments and underpayments nearly offset each other, and because the government recorded year-end journal entries to improve the accuracy of its reported pay expenses. Even though the accumulated error wasn't significant, the extent of the errors that affected individuals and the time it takes to correct errors in pay are unacceptable. We are conducting 2 performance audits of the government's initiative to transform pay administration. We plan to present the first of these audits to Parliament in November 2017.
The second matter in our observations is about how the government determined discount rates in estimating certain long-term liabilities. In our opinion, some of the discount rates are at the high end of the acceptable range. Higher discount rates mean lower estimated values for long-term liabilities. We expect the government to complete a review of its discount rates in the 2017-2018 fiscal year. The third matter in our observations is about the recording and valuation of National Defence's approximately $6 billion of inventory. We have brought this matter to the attention of the Parliament in each of the past 14 years. In the 2016-17 fiscal year, National Defence presented this committee with a long-term action plan that outlined the steps it would take to improve its management of inventory. We found that while problems remain, National Defence appears to be on the right track with its action plan.
The Government of Canada's consolidated financial statements took more than 60,000 hours of staff time, which is longer than it takes to complete 7 performance audits. This financial audit matters because it supports parliamentary oversight of the government and promotes transparency. I would also like to remind the committee that as part of our spring 2017 reports to Parliament, we issued a financial summary commentary that provided information about all the financial audits we do. Mr. Chair, I would like to thank the Controller General, his staff, and the staff of the many departments, agencies, and Crown corporations involved in preparing the government's consolidated financial statements. We appreciate their effort, cooperation, and help. I would also like to acknowledge the leadership of Mr. Matthews himself and his significant contribution as a champion of government financial management as he moves to his new role as Senior Associate Deputy Minister of National Defence, where I'm sure we'll still have the chance to work together.
Finally, Mr. Chair, I would like to say that I'm pleased that the committee has, once again this year, decided to hold this hearing so soon after the release of the consolidated financial statements, while the information is still current. This concludes my opening remarks, and we will be pleased to answer the committee's questions. Thank you.
Thank you very much, sir, and we'll now move to Mr. Matthews, please. Mr. Matthews.
Merci et bonjour, Monsieur le Président.
Thank you. Good morning, Mr. Chair and members of the committee. I'd like to thank you for the opportunity to discuss the public accounts of Canada for 2016-2017. As you already mentioned, with me today is Diane Parasini.
Consolidated financial statements for the 2016-2017 fiscal year, which ended on March 31st, 2017, in addition to other unaudited financial information. Mr. Chair, I am pleased to note for the 19th consecutive year, the Auditor General has issued an unmodified audit opinion on these financial statements. A great deal of work goes into these financial statements, which are prepared under the joint direction of the Minister of Finance, the President of the Treasury Board, and the Receiver General for Canada. I would like to recognize the excellent work of the financial community across the Government of Canada in realizing these results. C'est en grande partie grâce à eux que les États.
Thanks to them that the consolidated accounts are presented so well year after year. I'd also like to thank the Office of the Auditor General for their continued cooperation and assistance.
Recent reports issued by the OECD on rationalizing government fiscal reporting. The report notes that Canada's fiscal reporting framework employs many best practices, with a notable feature being Canada's use of websites, and in particular the Treasury Board Secretariat's infobase, to give access to a wide set of information. That being said, based on best practices noted in the report and in other countries, I believe there is more we could do to rationalize fiscal reporting. If it is of interest to members of the committee, I would be pleased to discuss this report. Mr. Chair, I do have a short deck which I am happy to walk the committee through if it is of interest, just to provide some background on the Public Accounts of Canada. And if you would like me to do that, and I'll just take your guidance in terms of how much time you want me to spend on that, and then move us along as need be. Finally, before doing that, two quick things maybe. As already mentioned, going through the Public Accounts of Canada, the page numbers en anglais et en français sont vraiment différentes. So we
Numbers in English and French are very different.
Questions on specific page numbers to find the equivalent in English and in French so all can follow along. So we would like to be a little bit disciplined on that, and we've got staff here who can help us with that. And finally, to draw your attention, Mr. Chair, an email was sent to the committee or to the committee clerk yesterday, as is normal practice, highlighting any errors in the public accounts that we're aware of before this meeting. There are three. They are all in Volume 2 of the public accounts, and they all relate to the same topic, and I would like to sort of explain why that is. In Volume 2, we are providing additional information this year for the first time. And clearly, while it's good information, we've got a few wrinkles to iron out in terms of the quality of that information. So all three relate to this new information on lapses. So it is additional information we have not provided before. Three departments have come forward and let us know about this. And it's the second year we've done this, but it's some wrinkles we still have to iron out. So I do apologize for that.
Thank you, Mr. Matthews. And as far as I'm concerned, you made reference to the deck. I think now would probably be the appropriate time just to take as long as you want on the deck. I think it's a good macro picture of the whole process of public accounts. We had privy to seeing some of it yesterday, but I would encourage you to do that this time.
Thank you, Mr. Chair. So I will start on slide 2, and the deck is available on screen. I do believe members have copies as well. And the purpose of this deck is to just provide background information on the Public Accounts of Canada themselves, some quick highlights on the financial results. The Auditor General has already mentioned his observations, so I will not touch on those very much. A little bit of information on appropriation and lapses, which is always an important topic, and we'll stop it there and then turn it over to the committee for questions. Slide number 4, just to situate us in terms of where we are in the financial reporting cycle. Sorry, slide number 3, my page numbers seem to be off. There we go. We are at the end of the fiscal cycle. Public Accounts of Canada and the soon-to-be-coming departmental reports are the last phase in terms of providing accountability documents to Parliament on the performance of the government. This follows a series of financial reports that starts with the budget, the estimates, mid-year updates that take us all through the cycle. There is a list of those reports on the far right side of this slide. I will give you a sense of what is out there. The one thing that is not on there is the Treasury Board Secretariat info base that I already mentioned, so it's an additional source that people can use. This is public accounts are a whole of government reports. There is a mix of accrual information and modified cash information in there. And if it's of interest to members, we can talk about what's what. But the budget and the financial statements of Canada are done on a full accrual basis. The estimates and related departmental spending are done on a modified cash basis, and that's why we have that mix. If I could take us to the next slide, in terms of the 3 volumes of the Public Accounts of Canada, and this is a a significant amount of information that is made public. Volume 1 is the financial statements of the Government of Canada, and that includes the audit opinion of the Auditor General. It also includes additional information on the major elements of the financial statements of the Government of Canada. Volume 2 is the companion piece to the estimates. So if you are interested in how departments discharge their parliamentary appropriations that were granted to them, Volume 2 provides information on department-by-department spending, including the lapsed or unspent authorities that were available during the year. Volume 3 is a mix of information that is provided for accountability purposes. You will see audited financial statements for some other organizations, as well as things like losses of public money, claims against the Crown, ex gratia payments. And finally, I should also indicate that for Volume 3, there is additional information online that we don't print simply because of volume concerns. So if there is additional information that is available online that is not printed. Next slide, please, on roles and responsibilities. Quelque chose qui ce n'est pas vraiment.
Something that's not really well understood by the general public is that the Government of Canada prepares the financial statements. It's our work to do that.
Those financial statements. So the financial statements are prepared by the government. That involves my office, the Receiver General, as well as the departmental financial management community. It is the government's choice as to which accounting policies they will use, and I will talk more about that in a moment. The Auditor General audits those financial statements. It is a source of confusion, as in some countries the Auditor General actually prepares the financial statements, but in Canada, North America, most G7 countries, government prepares, auditor audits. So you do have this independent verification of the financial statements themselves. I do have to say a few words on accounting standards themselves. If we could flip to the next slide, please. So we do have independent accounting standards in Canada. They are set by the Public Sector Accounting Board. The government follows those standards. So this is important in terms of assuring yourself that you have a high-quality set of financial statements. They are prepared based on the Canadian Public Accounting Standards that are independently set. If the government chose not to follow those standards, my friend to the left of me would have something to say about that in his audit opinion. So it is a choice, but the government does choose to follow those standards. Where my office gets involved in preparing additional policies, we do want to make sure that departments and agencies implement those accounting standards on a consistent basis. So my office will prepare accounting direction to departments on just how to implement the independent accounting standards or the government accounting policies to ensure consistency across the board. If there is a gap in Canadian public sector accounting standards, there are other standard setters out there that we would refer to. They are on the far right of this slide. The International Public Sector Accounting Standards is a good set of standards we can refer to when there's holes in our guidance or gaps. And then on the private sector side, you have an international set of standards as well, which is important for two reasons. Number one, it is an additional set of guidance we can refer to if we're seeing a gap. And secondly, some of our Crown corporations actually follow those standards, so they do have an impact on the government reporting entity. Turning to the actual financial results for the 2016-2017 year, what you'll see on this slide, and it is a summary of what you'll see in the financial statements themselves. This is on the revenue and expense side. You will see presented here the initial budget for 2016-17, as well as the actual for 2016-17 and then the previous year. And it's accounting standards that require us to produce it in this format. The reason I'm highlighting the budget for you is that it is the initial budget that must be disclosed in the financial statements. Department of Finance would update that budget throughout the year as economic circumstances change, as new spending decisions are made, but is the initial budget that must be disclosed in the financial statements. So if you look here, you would see that the initial budget on the revenue side was $287 billion. The actuals came in slightly higher than that, although slightly down from the previous year, and we can talk about why that might be later on. If you look at the expense side, you'll see program expenses, which are the expenses of our departments and agencies. Budget was $291 billion. Actual came in slightly below that at $287 billion, but higher than the previous year where it was $271. For those reasons, you will see the annual deficit came in at $17.8 billion, lower than the initial forecast of $29.4, and you'll see the previous year comparative figure for 2015-16. So that just gives you a sense of what you can compare the results against, the initial budget, as well as the previous year's results to see what actually happened. The next slide, we move to the balance sheet or the statement of financial position. What you will see here is just a comparator against the previous year. There is no requirement to budget for things like accounts payable. It just, so you don't have to disclose that sort of thing. The budget applies to the revenues and expenses. So the disclosure you will see here is versus the previous year. So if you can look, you'll see the liabilities are up over the previous year. That is typically what happens when you run a deficit. Liabilities go up. And on the asset side, you can see on the financial asset side, which is assets that are either cash or can be turned into cash, that we are running with more assets than we were in the previous year. I believe the Auditor General already mentioned the net debt figure, so you'll see that towards the bottom of this slide, as well as the accumulated deficit. The next slide is the actual government reporting entity itself, and it's probably not well understood by everyone that it includes departments and agencies, but also Crown corporations. So you will see things, and this just gives you a breakdown of what's in here to give you a relative size and by expense. So you will see the enterprise Crown corporations in the upper right-hand corner here. Those are our Crown corporations that basically are supposed to be self-sufficient. So here you're looking at Canada Mortgage and Housing Corporation. From an accounting standards perspective, this group would follow private sector accounting standards. They are arm's length from the government in an operations perspective, but they are still part of the financial statement entity, so we consolidate those, and the Auditor General would also audit those. The bottom half of this group, you will see our departments and agencies, and then on the upper left-hand quadrant, you'll see what's called our consolidated Crown corporations. So those are our Crown corporations that do rely on government financial support. And they're basically, you'll see Via Rail in here, you'll see our museums, the Canada Foundation for Innovation, just to name a few. So that's the sort of the federal family from an expense perspective in terms of what's in these financial statements. Slide 10, sorry, the next slide, just in case our numbers are off. On the observations of the Auditor General, he has already mentioned that he has 3: pay administration, management estimates, specifically on discount rates, and national defense, which is inventory. Some of these observations have been with us for a number of years. If you have questions on his observations himself, I would suggest you direct them to the Auditor General. If you have questions on just what the government is going to do about these, that's this side of the table. So we're happy to take questions on what the plan or progress, because national defense has been with us for a while, what the progress has been and what the plan is going forward. Next slide we have on total voted budgetary authorities. So this gets back to what Parliament actually voted in terms of departments' abilities to spend. This just gives you a breakdown of the larger departments to give you a sense of where the money is. As I said, these are the main players: Defence, Indigenous Northern Affairs, Health Canada, Global Affairs. So it just gives you a quick overview of some of the bigger departments in terms of their spending authority and what was actually used during the current year, so actual spending. The next slide we should spend a couple of minutes on, which is lapses. And we've only highlighted the significant lapses here. Lapses are often a topic of interest to this committee, and I would highlight 2 things for the committee. Number 1, the lapse number itself. And then, so you'll see for the big ones, and I'll just pick public service and procurement up at the upper right-hand corner, you'll see a lapse number of $510 million. And then below that, you'll see frozen allotments of $233 million. It's a little bit of technical jargon, but the point here being there's the lapse, which is how much money did Parliament vote versus what the department actually spent. And then there's always questions about why they didn't spend the full amount. A reminder that it is actually illegal to overspend what Parliament votes. We had no departments who did that, who overspent this year. So there's always going to be some amount of lapse, but there are some departments who are chronically higher lapsers than others because of the nature of their business, and we're happy to talk about that. The reason I'm highlighting frozen allotments is that gives you a sense of the planned lapse. So sometimes partway through the year, something happens where a department knows it can't spend the money. A decision is made where the department is told not to spend the money. Might be a budget cut on travel was one we put in place a couple of years ago, one in professional services. So we freeze money. So when you see a frozen allotment, if you're trying to understand what happened with the department, it's important to ask, how much of it was planned versus how much of it was frozen or not frozen, to give you a sense of, is it really just program money that wasn't spent, or was there something else going on there, so in fact it was actually a planned lapse. And that's why we have now disclosed these frozen allotments for you here. That is new information that is now available in Volume 2 for 2 years now on the frozen allotments, to give members a better sense of what's really at play in terms of departmental spending and the results they achieved. Happy to talk about these during the actual meeting if members have questions on the lapses. Since I mentioned public service and procurement, I'll tell you the big part of this lapse was around slower spending than initially planned on the parliamentary precinct. So that's just an example of a lapse. And so I think I'll stop there. And there is an annex here of definitions. If you are interested in some of the technical terms, happy to refer to those. And I'll leave it to you, Mr. Chair. So thank you.
Thank you very much, Mr. Matthews. I think we'll move on to the first round of questioning then. Again, we'll also remind you Finance Department is here. And so you can direct your questions if you so choose. Ms. Mendez, you have 7 minutes.
Thank you very much, Mr. Chair. Merci à toutes et tous.
Thank you all for being with us today again this morning.
Sorry, would be more to start with, because I'm sharing my time with Mr. Aria, on the form. Yesterday, after we met with both the Office of the Auditor General and Mr. Matthews and Ms. Pericini, we had a more training session, if you wish, with the Canadian Foundation of Accounting and Audit. Yeah, thank you, Audit and Accounting. And we were given some direction on how to read the public accounts. And one thing that struck me, I think it struck us all, is that we kept going from section 1 to section 2, refer to this table, refer to that table, go back to that text. And is there a way to change the way these are presented so that it would be a little easier for us to understand how parts of section 2, which is the financial accounting itself, go back to the discussion and analysis document? That's a form question, and I'll let Mr. Aria go with the content ones. Thank you, Mr. Chair.
But we'll, Mr. Matthews,
yes,
and then Mr. Aria.
So maybe very quickly, and our friends in the Department of Finance actually are responsible for the management discussion and analysis piece you reference. You've raised an important point in that the link between that and the financial statements is very clear. And if there's something we can do to make those links stronger, we're happy to consider that. I'm wondering if an interactive tool would be easier than the paper-based tools to sort of draw those links.
But sometimes just refer to.
Refer to?
Refer to a figure or a chart or something. But because it's well, thank God we had somebody who actually was telling us what to look for.
Because to properly understand those financial statements, the MD&A is absolutely critical, and I'm not sure if finance has to add anything on that front. But
well, only to say the management discussion and analysis tends to be a document that highlights the main trends in the public accounts, so be it with respect to debt or deficits, revenues and spending. It tends not to be a guide to the public accounts, and if that's something that would be useful to the committee, we're certainly open to working on that. I think that would be something we would want to do with the Controller General, absolutely. But we're completely open to making the document more user-friendly, which is, I think, what you're asking.
Exactly, please. Thank you very much.
Thank you, sir. And we'll go to Mr. Aria.
Thank you, Mr. Chair. Mr. Ferguson, 19 years of statements without any qualifications, but were there any difference of opinion which may not be material enough for you to qualify the statement?
Thank you, Mr. Chair. I mean, obviously, in the course of an audit of an organization that has revenue of close to $300 billion and expenses of $300 billion, there are always issues that come up that need to be discussed and need to be settled on. But at the end of the day, no, there were no differences of opinion on how to resolve the issues that came up in the course of the audit.
Are there any extra or out of ordinary items in this accounts? Anything that was not there the previous year?
Well, I think, in our audit observations, that's sort of the tool that we tend to use to highlight the issues that come up during the course of the audit that are most problematic. So obviously this year it was being able to audit pay expenses that took up a lot of our time. So other than that, I think there have been some I would call them minor improvements to disclosure and things. For example, amongst the liabilities on the balance sheet now, there's a specific line for the contingent liabilities that have actually been recorded. So there have been some improvements like that. But I think in terms of the main issue that came up in the course of the audit, it was around all the work we had to do to audit the pay expenses.
Talking of contingent liabilities, Department of Finance has issued loan guarantees. It has issued insurance programs managed by the government, $258 billion. It's on page 11.41, volume 1. What is that you did to ensure that none of these contingent liabilities will actually become a liability?
Can we just pause while we find that page in French? So 11.41 and...
Table 11.5, page 11.41.
En français, c'est la même chose. Donc, un instant? OK.
And just the same page number. One moment, please, while we find the page.
One is the same. I'm told typically on volume 1, the pages are pretty well the same. Quite a bit of difference in volume 2. So
11.41.
11.41 in volume 1.
It's quite big. Wherever it is, it's $258 billion.
So that is the value of the insurance in force by the two private sector insurers that operate in Canada. That is to say, Canada Guarantee and Gemworth, right?
What
and
have
the
you
government
done to ensure that this actually doesn't turn into a regular liability?
And so the 258 is the total insurance in force. The government has guaranteed, in the event that either of those companies would not be able to meet their obligations, so effectively go bankrupt, that after a 10% deductible was paid, the government would guarantee the mortgages in question.
Mr. Ferguson, this is the guarantee that is issued by the Government of Canada for a couple of private sector companies, right? And what is that you have done to check that it actually doesn't turn into a major liability for the government?
Well, that's what the process is with all the contingent liabilities, right? So the federal government guarantees, a lot of things, whether it's those insurance programs or whether it's, loans or other types of things. So in all of those cases, in the accounting, the departments involved, the Comptroller General's office will assess what is the likelihood that there would be a payout. So they will manage it from the point of view of, is there any possibility that the federal government will have to pay out? And what we would do is, and it will be different on every type of contingent liability because they're not all the same, we would go through it to determine whether they have done the due diligence to make an appropriate assessment of whether there's a likelihood that the government would have to pay out.
Thank you. Thank you, Mr. Area. We're a minute over. We'll now go to Mr. Leiper, please, for 7 minutes.
Thank you, Chair, and good morning, everyone, and thank you all for being here this morning. I just want to ask a couple of questions around net debt. So net debt of $714 billion is minus the asset value of $66 billion. How do you put a value on the assets? Because there's always a debate about whether bridges that government owns can be sold, or highways, or whatever government might own. Can you give us a quick overview on how you value the asset base?
So maybe I'll start, Mr. Chair. The net debt figure the member has referenced, and that is on page 2.6 if you're looking at our financial statements. Et donc, c'est le même page en français. The net debt is very much around liabilities less financial assets. So that's the cash and things we can turn into cash, accounts receivable, for instance. So that's what gets you to net debt is your liabilities less your financial assets, and the net debt is $714 billion. Below that, you'll see the non-financial assets, and that's the bridges, the buildings, the trucks, and that's what gets you to accumulated deficit. So the member's question on how we value those tangible assets, we start with what we paid for them. We depreciate them. So if it's a bridge, it might be 50 years. If it's a truck, it might be 10. And we do look at the assets to see if they're actually holding their value, because there are times when an asset is not clearly not going to last as long as we'd hoped, so you would write that down if that was the case. So those assets don't impact net debt, they do impact accumulated deficit.
Okay, now, where does the $237 billion of pension liabilities come in?
So that amount is up in the liabilities, and that would impact net debt absolutely. So all liabilities are factored into the calculation of net debt.
Okay.
So you are seeing those liabilities reflected in that number.
Okay, that answers that. I want to just ask a little bit about the public debt charges. There's a comment that says that the public debt charges actually decreased because of the lowering of the interest rate. But in the last year, we've now had a couple of interest rate increases. Is that going to turn that around in the future years?
So I will start, but I'm going to turn to my friends in finance. That question is very much around what kind of debt instruments the government has basically availed itself of, fixed rates, long-term, short-term. So what you're seeing is, in terms of the actual results, it's the interest the government has paid. The question on the impact of interest rates on future interest costs, I believe, is what you're after, and I'll turn to Paul and Nick on that.
Well, to the extent that interest rates rise, naturally the debt charges on our market debt will increase. There will be an offset, however, from the actuarial value of the pension obligations, because as the discount rate on those obligations rise, the current service costs will be reduced. But I would expect on net, the answer to your question is, generally speaking, with an increase in interest rates, debt charges will increase.
And I think that actually leads into what I was going to get into on my next question, and it is around the. I wanted to ask a couple of questions about the write-offs. It's write-offs of $4.3 billion. Can you give a couple of examples of what may have been written off in the past year that would account for the majority of the $4.3 billion?
Sorry, Mr. Chair, I'm just wondering if there's a page reference we can...
Well, I'm looking at a document that you probably don't have, but it says Volume 3, page 2.7-211 of Public Accounts Canada. I don't have the Public Accounts document in front of me.
Here.
Well, I'm not going to start looking at that in my 7 minutes, thank you. But this document from the library says 2.7, provides information pertaining to debts, obligations, and claims written off or forgiven by the government in the amount of $4.3 billion compared with $3.3 billion in the previous year. So I'm just wondering if you don't have anything handy on that, maybe you could just provide it to the committee going forward, because I have one other question, if I can, of the Auditor General.
Maybe pose your question, and I'll come back to Mr. Matthews in regards to your question on the debt.
Just give us 2 minutes and we'll have an answer on that.
Okay, that's fine.
Okay, 2 minutes, his time will be up, but go ahead and ask your other question then, Mr. Lightford.
Yeah, I guess it's for the Auditor General. Typically, in Auditor General's reports, there's a commentary about how governments have responded to previous Auditor General's reports. And I'm wondering, do you have any comment on how governments, are there things that you have recommended in the past few years that continue to be lingering that government hasn't dealt with?
Well, in the course of our financial audit, and the way that we report on financial audits is different than the way that we report on performance audits. So again, the instrument that we use to report on the most significant issues are our audit observations. This year you will see that we are again reporting on the issues at the Department of National Defence and how they account for their inventory. And we've been reporting on that for 14 years in a row. The department has brought forward a plan to this committee. I think in this year's audit observations we tried to go back to the plan that they presented to the committee to see whether they seem to be on schedule with that. The only other one that I would raise that, in fact, we didn't mention in this year's audit observations, we've mentioned it in the past, it still hasn't gotten better, is we are still not able to provide an audit opinion on the Reserve Force Pension Plan financial statements. So that's a long-standing issue as well. You know, I think in terms of the pay issues that we raised last year in our audit observations for the first time, you know, again, we're raising those, and, you know, the government is obviously working on trying to resolve that situation. And then on the discount rates, we've now raised that for a couple of years, and the government has said that they are going to look at, you know, how they calculate discount rates. So all of those major issues I think we deal with through the audit observations. We also issue, you know, letters to departments if we come across sort of more normal issues around some internal controls that they need to fix, and we do that through management letters, you know, with the individual departments, and usually they are, you know, when we raise those things with them, they work their way through to trying to improve them.
Thank you. And Mr. Matthews, did you quickly want to respond to his question? And then to Mr. Christopherson.
Sure. Thank you. I'll be very quick, Mr. Chair. So it is indeed Volume 3, Section 2. There's all sorts of disclosure department by department on the amounts written off or forgiven. The ones that will jump out at you if you're looking to that section are related to Child and Family Services and the Revenue Agency. So you're looking at programs here like Canada Student Loans, taxes, those types of things. So it's very much tied to the nature of the program, where the government has determined that they either cannot collect or have basically written off the debt.
Thank you. Mr. Christopherson, you have 7 minutes.
Very good. Thank you, Chair. And thank you all for your attendance today. I just want to start by shouting from the rooftops how great it is that we've had 19 clean audits in a row. I've had the honor of sitting around this table for 15 of them, and I got to tell you, every time it's still a great feeling, and I get no credit at all. My party's never been in power. Any credit I get and we get is part of being part of the parliamentary system. But given that this committee's job is the premier oversight of government spending, and Chair, we don't pull our punches around here. This is the one place that we can't afford to. We hit hard when money's being wasted and when government is not following the policies they should. Conversely, when something is done right and good and positive, we need to give over-the-top praise. And so I want to give that over-the-top praise personally as someone who's invested a lot of blood and sweat and heart into the work of this committee. And it's just it's a wonderful thing. Canadians should be proud of the fact that at the very least nobody's robbing the Treasury. And I've been to enough countries in the world where you can't say that it does make you want to come back here and pound the table and say congratulations to every single person who works in the financial community, in the government, to bring us to this day. Congratulations to you. You did a great job and we're proud of you. Please keep up the good work. Having said that, now we get down to some nitty-gritty. I also want to pick up, if I can, Chair, where the Auditor General did in commenting on Mr. Matthews and his job. Some of us got to know Mr. Matthews a lot better when we were at an anti-corruption conference in London, and I can tell you that I wholeheartedly agree with the praise that the Auditor General is giving you for your job as Comptroller General. You've done an outstanding job. You're just a fantastic public servant. I wish you all the best at Defence, and I know all of our ongoing problems at Defence are going to be gone like that, Bill, because you're going to be there to take care of it for us, which is my segue to my next question, actually. and that is that we're making some headway. The Auditor General said in his remarks that we found that while problems remain, national defense appears to be on track with its action plan. Whew, finally, took long enough. However, I don't want to take my foot off the gas. It says that there are problems that remain. Auditor General, would you please just touch on what are some of those outstanding problems?
Thank you, Mr. Chair. I'll actually ask Ms. Hogan to go through it. You know, that the issues are itemized in our audit observations, but I'll ask Ms. Hogan to go through what they individually were.
Thank you.
Thank you. So we did see some progress this year, as we have over the last 4 years at the Department of National Defense. This year they did take on a large project at looking at the pricing of ammunition, and so we definitely saw reduced errors in the pricing of ammunition. Where we continue to see work needed is in the area of obsolescence and in the area of valuation for consumables. So they really have two types of inventory, ammunition and non-ammunition. So it's all the non-ammunition that they now need to tackle a little bit better. Last year we did mention that they had implemented an allowance which accounted for some of the obsolescence, but again that fixed the statements, doesn't fix the underlying records. So some of the steps they have in their action plan this coming year are to look at some of those things.
Very good. If I might, just to pick up on where Ms. Mendez was in talking about the documents, because I still have that bugaboo that we don't have it paginated in common sense way. But I would just suggest maybe a workshop, something for us to consider, a workshop between the departments affected and the committee to go through what your needs are, because you have certain guidelines you have to follow, and try to marry that with some of the concerns that we have to make this as user-friendly as possible. Last question, because I'm running out of time. It was mentioned, Mr. Matthews, about the frozen allotments, and I understand that, but my question is this. Just because it's frozen doesn't necessarily mean that there's not a problem. It just puts a nice label on it, so I'll say that first. But secondly, what is to prevent a department from just artificially slapping the label of frozen asset to get themselves out of this jackpot with this huge number, to reduce that? What's to prevent them from just saying, we're going to note that as frozen, and that mitigates a lot of our problem?
Two things. Thank you, Mr. Chair. A department can't do it by itself. They actually have to come into the Treasury Board Secretariat, Central Agencies of Finance, and basically get agreement that, yes, we are indeed going to freeze that. So it's not an action a department can take by itself. Typically, you'll freeze it because there's been a reduction in another area, maybe because it's acknowledged the funding can't be spent this year and they'd like to spend it in a future year, which is subject to parliamentary appropriation. But typically, it's because something else has happened and they cannot do it by themselves. But you're right, it doesn't explain away the issue, it's just additional context.
So what about that last part, though? How do we then, I mean, you've come in and said, you know, these are frozen, that mitigates or gives some explanation, but how do we get to that point that you just raised? Where does that show itself?
So you'll see it in the analysis in the info base. You'll see some additional disclosure department by department. If you're ever calling departments as witnesses, it's a great question to ask around why did you lapse, what was frozen, and what's going to happen with that frozen. That's perfectly acceptable questions. Okay. The explanation varies department by department.
If I have, it looks like I'm down to my last seconds. Just what is the process then for getting approval? You say they have to go through what is that process, please?
Typically it involves a Treasury Board submission, not always, but it would typically involve coming to Treasury Board. We always make sure our colleagues in finance are on side as well, because it does, if a department's not spending money in the year that was planned, one of two things happens. It just goes away. Or secondly, they could say, we'd like to spend that in a future year. That has an impact on the fiscal framework, so the Department of Finance has to mull that over and then basically...
Does that require a ministerial sign-off?
They're better off to answer that question. My understanding is yes, but...
Yes, it would require a ministerial sign-off.
Very good. Thank you so much for your answers. Thank you, Chair.
Just on that, because there is still a little time left in them, does any of that become public? We have a public document with the budget, so this amount is allocated. If all of a sudden, midway through the year, we have a frozen allotment, does any of that become public before the public account? Like, how would we know that something is allotted? If a minister is standing and saying, well, we've designated X amount of money in the budget, how do Canadians understand when an allotment has taken place?
So that's a great question. It's a recent improvement. So it is now disclosed as part of the estimates process because it is in the planning document. So the estimates, which are one of the precursors to the public accounts, when the estimates are updated throughout the year, you will see disclosure that is public around what's been frozen and what's not. And that's a fairly recent improvement. So it is public. The Parliamentary Budget Officer, when they're looking at their analysis on spending, they will often refer to those frozens, and you can get at it through the Treasury Board Secretariat website.
Thank you very much. We'll now go back to the government side and to Mr. Massé. Monsieur Massé, vous avez...
Mr. Massé, you have 7 minutes. Thank you, Mr. Chair. I'd like to follow along the same vein as my colleague regarding write-off of debt. I can echo the comments of my colleague, Ms. Mendez. When we do an analysis of public accounts in Volume 3, we realized that last year we wrote off more than $4 billion in debt. And this figure seems to be consistent from one year to another. Obviously, this $4 billion, if we exclude debts that were write-off because of the bankruptcy law, it's still a considerable amount. Mr. Matthews, can you tell us more and explain what leads to write-off of debt in a department? How do departments decide to write off debt? Thank you very much for your question. I'd like to say 2 things. First, when we prepare public accounts in Canada, as an accounting firm, we have to try to estimate how much money we're going to receive. How much the organization will pay. If we don't think they will receive this money, we can make adjustments to the public accounts.
100, we think they're only going to pay 90. We can do an adjustment, and the Auditor General would actually require us to, that says, here's our best estimate of what we're going to collect. That is separate from the process of write-off, forgiveness, or remission. To do that, with some exceptions, one has to come to Treasury Board and formally get an approval to do those things. It's good housekeeping, and it does get publicly disclosed, and that's why it's important to do. So if you're in the business of issuing student loans, if you're in the business of supporting some vulnerable Canadians, if you're thinking about loans for immigration, you're going to lose some money. And we do encourage departments to, yes, if you think you can't collect this, when the time is right, come on in and write it off. So on the one hand, it's a big dollar amount. On the other hand, we do want departments to do good housekeeping and get this stuff done.
Le vérificateur général a fait mention évidemment du déficit accumulé.
The Auditor General mentioned the 17.8 million in accumulated debt. When we take account of the write-off in debt this year, this is still quite a high amount. In your opinion, should the departments, are they doing everything that's necessary to recover these debt that is owed to the Crown before they write off this debt? The question was for Mr. Matthews. It depends. Every department is different. Some are larger than others. The largest departments are better than the smaller ones.
That departments have available, they can use Canada Revenue Agency, they could use the Receiver General, or they can use, use their own facilities or people to try and collect the debt. There's some debt that, frankly, it's just not worth collecting, it's not worth the effort, but I would tell you that the experience varies. Canada Revenue Agency is very effective. Some of the smaller organizations, they struggle with that, and maybe there's a better way.
Merci, M. Matthews. Vous avez fait référence, évidemment, à l'agence.
Thank you, Mr. Matthews. You mentioned the CRA and their debt, and you said that they're particularly good at recovering this money. But we still see that the CRA, over the past year, wrote off $3 billion in 2016-17 and $4 billion in 2014-2015. So this is a lot of debt that's been written off. You also mentioned the Receiver General of Canada. Just out of curiosity, I have heard and I know that the Receiver General has a pilot project to try to support departments in collecting debt, and they seem to be having good results. Are you aware of these initiatives, and can you tell us about them? Is this project, should it be explored further? Thank you for your question. Yes, I'm aware of the pilot project. There are 3 projects, I believe. And yes.
And I think when you're looking at these pilots, when you could you assign debt to the Receiver General to collect? You have to look at the nature of the debt. But yes, we've had some good success. I'm not convinced it would be successful in every case, but there are some good cases where, if you look at debt related to Canada, to pension overpayments, those types of things, where you have a relationship with the organization of the person, absolutely. If it's a one-off where you've only dealt with the organization one time, the Receiver General would probably struggle just like a private company would. But we've had some good success. We're going to continue the pilot. It's going to be extended. And really what is on us is to figure out when the Receiver General is a good choice and when there are better mechanisms out there. And so as a result of the pilot, we will be issuing guidance to departments. It won't be musts, but if it's this kind of debt, Receiver General works best. If it's this kind of debt, CRA is better. If it's this kind of debt, do something different. So that's what we hope to learn. But there are ongoing pilots, and yeah, they've had some good success.
Merci, M. Matthews. Peut-être une dernière question.
Mr. Matthews, one last question for Mr. Rochon along the same lines. In your opinion, Mr. Rochon, obviously our government's context is focusing on tax fairness. Do you have any comments about the fact we should support departments to make sure that they're using all the necessary mechanisms to make sure that they can collect on these debts before they're written off? Yes, I agree entirely with my colleague, Mr. Matthews. When it's appropriate, yes, it's a good investment. But you also have to recognize that sometimes there are situations that are tricky and the amounts cannot be collected. So there's always a balance that has to be struck, and some level of judgment is involved. I think I have 30 seconds left. Yes, Mr. Massé? Okay, you're done?
Can you disclose, is there any of the debt that has been canceled or forgiven that is foreign debt? And what percentage of the overall $4 or $6 billion would be foreign entities, or maybe forgiveness of loans to other?
We can get that information for you. Off the top of my head, the bulk of it relates to programs for Canadians, but there are some. There's certainly possibilities. Some is foreign, so especially the international side. So we will. I'm sure we can get that for you.
Just as a ballpark, do you think it would be 20% or well under that?
We can probably get you a number before the end of this meeting.
Thank you very much. We'll now go to Mr. Nuttall. Mr. Nuttall, you have 5 minutes.
Thank you, Mr. Chair, and thank you to the Auditor General's Office, Auditor General, and certainly the staff from Treasury and Finance for being available here today. I wanted to follow up on some of the questions regarding write-offs and to a specific program, and then perhaps some follow-up questions in a specific industry. The Canada Small Business Financing Act, what are the write-offs like associated to that specific program?
I'm going to have to get back to you on that one. I actually don't have information at my fingertips. I'll check and see if we can get something before the end of the meeting, but off the top of my head, I'm afraid I can't answer the question. I'm sorry.
Okay, and so we don't know how much of the total write-offs are related to that?
Well, I will cycle through the Volume 3 here and look by department, and that might give us some intelligence as to that act specifically, but my guess is it's going to be hard to find on a moment's notice.
Okay, then I'll follow up at a later date. In terms of lapsed funds, when one of the departments that you highlighted for us was ISED, Innovation, Science, Economic Development. Lapse of $434 million, where there was an estimation that $246 wouldn't be spent partway through the year. Is that what I'm understanding in terms of the frozen allotments?
What page are you on, Mr.
So I'm in the page 12 of the public accounts, the presentation that was.
Yes, so on page 12 of the deck, we have ISED on there, and there's indeed a lapse of 434 million, and the frozen allotment is 246. So you're correct.
Okay, and when you go through the volume 2 details and expenses revenues, when you look at the different agencies that fall within ISED, there's some of the agencies are way out of whack with what the average lapses are. For instance, if you look at the Canadian Space Agency, there's a 15% below what was estimated. Then there's two others, FedDev, Southern Ontario's 12%, and the National Research Council of Canada's 20%. The interesting thing on the National Research Council is there's $149,566,000 that is available from previous years. At what point does that, do those dollars then phase out?
So two things. So we'll speak generally about ISED, Mr. Chair, and then we'll ask the specific or answer the specific question on how dollars phase out. So when you look at ISED, Canada Space Agency was highlighted. Their lapse is very much related to one big project, the radar satellite project. And when you're dealing with a complex project like satellite development, delays are not unimaginable. So you've got delays there which cause a lapse. So that's not ideal, but it's explainable. You then cycle into some of the other organizations you mentioned where you've got lapses in grants and contributions dollars. And grants and contributions dollars, very much the government is takers. You need to have applicants. Sometimes the applicants materialize in volumes we expect, sometimes they don't. And then you have an issue of whether you can actually negotiate a transfer payment agreement or not. So that, depending on the nature of the department, you may see some delays. Infrastructure is a great example of where negotiations cause delays. So in terms of the ability to carry forward money, there's a built-in carry forward around operating and capital. So departments are allowed to carry forward 5% of operating and a certain percentage of capital. There is no automatic rollover of grants and contributions dollars. So if a department can't spend its grants and contributions dollars, they basically have to make an application to our friends in the Department of Finance and say, we would like to spend this money next year. If Finance blesses it, it then would get picked up again in the supply cycle, back to Parliament to get voted, and away we go again. But there's no automatic rollover of grants and contributions dollars.
Okay, so here's where it kind of doesn't make a whole lot of sense to me. So last year there was a 10% rollover approved into the National Research Council of Canada, and then this year they fall 30% short, not 15% short on their spending estimates. At what point does that then just fall back into general coffers and go towards?
So the default is if it's grants and contributions dollars, or if it's above a 5% of operating or 20% of capital, it goes back into the general coffers. The responsible department can then make a case for saying we'd like to reprofile that money. That means spend it in a future year, and then the government has a decision to make. But there's no automatic. So the default is if no one does anything, back to general coffers. If there's a decision made to, delay the spending to future years, that's more a fiscal discussion that has to be had.
Thank you, Mr. Matthews and Mr. Nuttall. We'll come back to you soon. Mr. Chen, please, you have 5 minutes. We're in the second round now.
Thank you, Mr. Chair. Mr. Ferguson, you have, as Auditor General, identified 3 key observations, one of which is the government's selection of discount rates used to estimate long-term liabilities. To illustrate the material impact of this, you do give the example on page 2.43 that a 1% reduction in the discount rate for estimating the accrued benefit obligation for unfunded pension benefits results in an increase of this liability to the tune of $7.7 billion. So this would clearly be significant, and it would overall significantly the financial picture. By using a higher discount rate, one could effectively lower the estimate for long-term liabilities. On page 2.43, it states, while we have concluded that the assumptions underlying the government's significant estimates are within a reasonable range, historically, certain discount rates have been at the high end of the acceptable range when compared with market trends. So my question is there a difference between what you deem a reasonable range vis-a-vis an acceptable range? If there is, I'm assuming that a reasonable range would be better than an acceptable range. And if that's the case, how do you determine what is reasonable and what is acceptable?
So thank you, Mr. Chair, and I think that's perhaps unfortunate wording on my part in the audit observations. When we referred to reasonable range and acceptable range, we're referring to the same thing. So within a range that is, that you would either call reasonable or acceptable, we used them as synonyms. But I understand why, the fact that we use different words, somebody could assume that we were meaning two different things, but in fact, it means the same thing.
So then, with respect to the government's method of selecting discount rates, is there a difference compared to industry practices, whether in the public or private sectors?
Well, certainly I think when it comes to selecting the discount rates for things like the unfunded portion of the pension plan, I think that's where there may be some differences between what the federal government is using to select a discount rate and what other governments would use to select a discount rate. So, one of the parts of the analysis that it needs to be done on the discount rates is looking at, that comparison to others, and also looking to make sure there's consistency between the different liabilities that the federal government has and how they're selecting discount rates for those various liabilities. So there are some places where the way the federal government is selecting the discount rates may be unique to the federal government, but all of that needs to be part of the analysis that we've recommended that they do to rationalize the discount rates they're using.
Okay, thank you. One of the financial highlights in Volume 1 is with respect to Canada's debt to GDP ratio. And much discussion happens around debt to GDP ratio and comparisons between Canada and other G7 countries. I just want it to be clear on the record, when you do look at different countries, they are set up differently. Some might have provincial or state levels of governments, others as well, municipal levels of government. When the IMF compares the net debt to GDP ratio for the G7 countries, do they take the approach of looking at the figure in a total government lens? Are they accounting for all levels of government and their respective total net debts when making those comparisons?
Thank you, Mr. Chair. So I'll start by explaining sort of how I understand the IMF calculation. Perhaps, finance may want to jump in on this as well. To me, the IMF calculation of net debt to GDP is a good measure from a relative point of view, but not from an absolute point of view. So relatively, I think that the measure is very good because it shows how Canada compares on a relative basis, apples to apples comparisons to other countries. I think it essentially shows that the next best country in the G7 has a debt burden that is roughly twice Canada's. And then after that, and I believe that's Germany, and then after that I believe it's the UK and the US that are 4 times Canada. So on a relative basis, it's a good measure. The percentage, though, I'm not so fond of, because what it does is it takes the federal government's net debt, it, as I understand it, deducts off the federal government's pension liabilities, so the $240 billion that the federal government owes in pension liabilities to its employees, I believe, is deducted off. It adds in the net debt of the provinces and of the local governments, right? So it expands net debt to not just a Government of Canada issue, but to a definition of all net debt of all governments in Canada, okay? And then it deducts off the assets of the Canada Pension Plan and the Quebec Pension Plan. And again, it goes through all of that to try and put things on a comparative basis to other countries, because not all countries record their pension liability. That's one reason why Canada can get 19 years worth of clean audit opinions, is because Canada records its pension liabilities, other countries don't. So in the IMF's calculation, they have to balance all of those things off to try and get an apples-to-apples comparison, and that's why I say on a relative basis, I agree with the results of it. But when it comes down and it says that Canada's net debt to GDP is roughly 27, I think it's 27.6% or something like that, that's a number that doesn't include all of the debt of the federal government because it excludes the pension liability, and it reduces the debt by the assets in the Canada Pension Plan and the Quebec Pension Plan, which are not assets that can be used to pay down any government debt. So I don't like the 27%, and I don't think people should focus on the 27%, but relatively, it's a good measure. The best measure, in my opinion, the best measure of debt to GDP is the net debt to GDP measure in terms of the federal government itself. So that's the net debt to GDP measure. That's the $714 billion of net debt to the GDP of Canada, which I think is probably just slightly over $2 trillion. And I believe that comes out to somewhere around 35%, and I think that is the best measure. If you go through the financial statement discussion and analysis, you will see at least 3 other comparisons of debt to GDP. You'll see the accumulated deficit to GDP. You'll see the interest-bearing debt to GDP, the net debt to GDP. You could also do a calculation of total liabilities to GDP. So there are many different ways of comparing debt to GDP, depending on your definition of debt. I think the best one is to do the comparison of net debt to GDP on a financial statement basis. The IMF one I like from a relative point of view, but I don't like from an absolute point of view.
Thank you. We're like 3-4 minutes over, but it is interesting. I want to go to Mr. Rochon. He was indicating that he wanted to answer a bit there, and maybe even Mr. Matthews.
I really think it depends on why you're looking at the debt, and that really goes to what measure you want to use. Absolutely, if you're kind of comparing across countries, the IMF calculation is the more appropriate one. It allows us to compare Canada to the United Kingdom, for example, which is a unitary state. We're not, so you should add the provincial levels of government in. You should also recognize that we include a number of liabilities related to pension obligations and benefit obligations that other countries do not, as well as the fact that we are saving quite a large amount by international standards to pay for future pension obligations that other countries are not, for the most part, accumulating. So, I mean, if you were an international investor, or if you were kind of saying, how do we stack up vis-a-vis other countries, I think the IMF measure is absolutely the right measure. We, as you know, very much agree with the Auditor General. If you kind of are looking at the federal government's debt situation from a sustainability or a pure financial perspective, we would agree that the net debt is the right number to be using.
Thank you. Thank you, Mr. Chen, and thank you, Mr. Rochon. We'll now move to Mr. Nuttall, please, for 5 minutes.
Thank you, Mr. Chair, and thank you for that answer from the Auditor General. I thought that question from Mr. Chen and the detailed answer was great. Provide a lot of clarification, certainly in my own mind. I wanted to follow up on a question that Mr. Liepert put forward earlier, and I know that some of that information is going to be forthcoming, and perhaps we could add this to that information that'll be coming. But it says the overall interest paid was lower than what would have been projected. Do we know what vehicles or tools allowed us to come in much lower than we had estimated at the beginning of the year?
Matthews? Go ahead.
And then I'll let Mr. Rochon give real content. There is a document that is not part of the public accounts, the debt management strategy document, Department of Finance publication, extremely useful document in terms of understanding the debt management strategy of the federal government. That is their publication. Mr. Chair, time permitting, we do have an answer to the member's previous question on small business. So if there's time permitting at the end of this answer, maybe we'll have Diane answer your last question.
Sure. Why don't we try to answer both if we can?
Yeah, I can be short. The answer to your question is the 10-year government bond rate came in about 70, looks like 30 basis points lower than we had projected at the time of the budget. And that is on page 1.3. You have the projection versus the actuals for those interest rates.
Thank you, Mr. Sean and Mr. Matthews. Back to the other, or Ms. Parasini.
I'm going to have Diane get on the record here.
Thank you. The Canada Small Business Financing Act write-offs is on page 2.9 in English ou 2.10 en français.
2.10 in French.
So there you will see that there were 907 write-offs totaling $60 million last year.
Totaling $16 million?
60.
$60 million. And sorry, I just don't have it open in front of me anymore, so I don't.
Page 2.9 of volume.
Oh, sorry, volume 3.
3, yeah.
And the total, so $60 million in write-offs. And what was the total? What was the total of that program?
The only thing I would highlight for that question, Mr. Chair, is that write-off is not representative of 1 year. You can write off 6 or 7 years worth of program data. So we will get you the program spend, but do understand that when write-offs happen, they can be for over 10 years, 12 years.
Perfect. So is there a 10-year average that we can get to understand the trends? The reason I ask this question is that this one specifically is an interesting program for underwriting debt directly to small business owners, and I'd like to understand where it fits in comparison with other underwriting we do. It has much more risk associated with it compared with, let's say, GEMCO or CMHC and the underwriting of debt associated to those departments.
So I think, Mr. Chair, we'll do a takeaway to give the member a bit of a history on the write-offs versus the program spend over. We'll go back 10 years, if that works. Yeah. Okay.
And on the other point, Mr. Matthews referenced the fact that Finance Canada had the publication of the discount. Was that in regards to discount rates?
The debt management strategy.
Okay.
Yeah.
Is that's online then, Mr. Rochon? That's on the finance website?
It is, and it's published as part of the budget now.
All right. Thank you. We'll now go back to Ms. Shanahan, please. You have vous avez 5 minutes.
5 minutes. Merci beaucoup, Monsieur le Président.
5 minutes. Thank you very much, Mr. Chair.
I think this is so illuminating for us parliamentarians to better understand what is a pretty singular set of financial statements. I think we'll all agree, even though I agree with my colleague, Mr. Christopherson, that I think that Canada is up there in the gold standard as far as the integrity of its financial reporting, and I thank you all for that. Because one of the challenges, it's not only in referring to the different statements, but the fact that the budget process is on the estimates process is on this sort of modified cash basis, and that's what we as parliamentarians have to vote on a regular basis, whereas, of course, the financial statements themselves are on an accrual basis, and you guys have to do all of that adjustment between the two. So I just want to refer to two parts of the statement. One will be the balance sheet. I want to tackle the value of non-financial assets a little bit more, but I just want to address cash flow. Where do we see that in the financial statements? The fact that, you know, there's money that comes in, there's money that goes out on a month-to-month basis. It's kind of arbitrary, is it not, as to, I mean, it has to do with business cycles and collection cycles if we think of the CRA. So, you know, as a parliamentarian, when I hear reference to, you know, the monthly is it the fiscal update, and you know that this number comes out and that number comes out. What does it really mean? Are these meaningful numbers for us? Is a 12-month period even a meaningful number for us? What are we looking at?
Maybe I'll start and turn to my friends from finance for a little bit of help, Mr. Chair. So if you were to take volume 1, page 2.8, you will see the government's statement of cash flow for the whole year. So that gives you a sense of the ins and outs, and that is required disclosure by accounting standards. C'est exactement la même page en français. So you do give a sense of where the government's cash came in from and what it spent its cash on. You know, was it to pay down debt? Was it to pay salaries? That sort of breakdown is there. So that's the annual bit. On a month-to-month basis, the member is quite right in that for finance to properly manage the debt, they have to have a sense of what's coming in and what's going out. And it's very easy to project, or easier to project our own expenditures, what we're going to pay, versus what the Canada Revenue Agency is going to bring in tax revenue, because you don't really know when corporations might file, etc. So the forecasting is part science, part art. But there's been improvement in our ability to forecast cash flows, and the fiscal monitor does give you a sense of how things are during the year. Is it an exact indicator of what's going to happen at year end? No. We make some year end adjustments for things like, are we going to collect the debt, some accrual adjustments for tax return processing, but the fiscal monitor throughout the year is monthly, and it's a reasonable indicator of how things are going once you understand that there are some adjustments made at the end of the year. Not sure if my friends in finance want to add.
Sorry. Perhaps the only thing to add is the Department and the Bank of Canada devote some resources to forecasting both the inflows and the outflows, so that the timing of our auctions for treasury bills and bonds are set up with the view of when in the calendar year cycle the government's going to require liquidity. One, and then two, the government maintains a reasonable liquidity buffer such that anything unforeseen can be managed.
Okay, excellent. Thank you very much. And how much time do I have? 1 minute? So just to tackle non-financial assets, just so that we understand, those are the capital assets that the government owns. How is the value estimated? And Auditor General, I know that in your commentary, which we haven't addressed here directly, but we have as reference, you talk about some of the problems concerned with reporting on capital assets. This would have been the commentary on last year's financial asset audit.
So maybe I'll start with the accounting policy, Mr. Chair, and then leave it to the Auditor General to address his observations. So the way the assets are recorded is purchase price, so it's cash, what we actually paid to acquire or build it. And then once the asset is in service, it's depreciated over what we estimate its useful life to be. If during its useful life we get a sense that our estimate is wrong, we would do a write-down of that asset to write it down to what we think its real value is. You will not see us revaluing assets for fair value, your real estate, what's it really worth. This is historical cost. If it's a building or a tangible asset, we depreciate it. Land, obviously we don't depreciate. Land does not depreciate, but it's based on what we paid for it, not what it's actually worth. And I'll let the Auditor General maybe add any comments on his observation.
Thank you. So I believe in the observation, what we were talking about, I believe it was when we were specifically talking about sort of the financial statement discussion and analysis and the type of information that could help readers maybe get a little bit below the numbers, a little bit into what do the numbers mean. So as you said, on the balance sheet, there's a number for tangible capital assets of $69 billion. That number on its own doesn't tell you a lot. You can go back into the notes to the financial statements, and the notes will tell you what the original cost of all those tangible capital assets were and how much they have depreciated. So one of the measures that we said, you see on this type of thing from time to time, is looking at that. So what percentage of assets actually been depreciated? So that tells you, are the relative to their original capital cost, are the government's assets mostly, almost at the end of their useful life? Or are they at the beginning of their useful life? So $69 billion doesn't really tell you, is that $69 billion worth of old assets, $69 billion worth of new assets? An indicator that helps people understand, where are the assets in terms of their useful life. The other thing is a comparison of, how much does the government spend on capital assets in a year compared to how much depreciation are they recording on the assets they already own, which again helps you understand whether whether the government is replenishing its assets at least as quickly as they are depreciating, knowing that you'd have to take into account that it costs more to replace an asset than it would have cost, 10 or 20 years ago. But those types of indicators is what we're talking about in that report that can help people understand a little bit better what's the state of the tangible capital assets, just using the numbers that are already in the financial statements and not necessarily just, what's the net book value.
Thank you very much. I don't see any other answers on at the table, so we'll now go to Mr. Christofferson, please.
Very good. Thank you, Chair. Two questions, if I may. One, on the financial results, I believe this the deck from Treasury Board, page 7. The annual deficit, the budget 2016-17 was 29.4. The actual was 17.8. Even adjusted, the budget was 29.4, actual at 15.9. Not that it's a bad thing at all that there's less debt than anticipated, but again, for the longest time, there's been this discussion and allegations and accusations against governments that deliberately inflate what the projected deficit's going to be, and then lo and behold, by magical, wonderful management, they managed to get that down to half that. Now, the PBO was created in large part to try to offset that, to give some sense of numbers that people can rely on. So my first question rather, is to both the Auditor General and to the Comptroller. That still seems like a pretty big discrepancy, 29.4 to 17 or 15. And also, any thoughts on PBO? And is it being used in the way that is most effective? I want to give both of you an opportunity to comment on the PBO, because there's some concern about whether or not we've got that right or not. And the other question, I want to follow up on what you raised earlier, Auditor General, on the Reserve Force Pension Plan and your report of spring 2017 on that. And I want to read the paragraph and then I'm done, Chair. And it reads as follows. National Defense's slow progress in resolving this matter is unacceptable. This is the Auditor General speaking. Unacceptable. In the 9 years since the Reserve Force Pension Plan's creation, the office has been unable to provide parliamentarians and plan members with assurances that the plan's financial statements, which include a reported pension liability of, wait for it, $650 million, are free of significant error. This situation leaves parliamentarians and plan members without assurance that the plan's financial statements present credible information about the plan's finances. I'd like to hear a little bit more about that, please. Thank you, Chair.
Mr. Matthews and Mr. Ferguson, on the first question, I think Mr. Rochon as well, dealing with why the deficit was less and maybe even revenues were less. But Mr. Matthews.
So maybe two things. The forecasting ability has improved over the years. The economy does change, and I'll leave it to my colleagues from finance to explain what happened on the economic side. If the theory is there's deliberate pessimism in the forecast, there is a bit of that for risk that finance will speak to. But is there any systematic, deliberate under forecasting? No, there's not. And it is challenging based on all the the economic results and what's happening globally today. The PBO. The only thing I will say in the PBO is they're takers. So yes, they have some things they have to do, and then members of Parliament make individual requests. I think it's a fair question to them as, how do you make sure they allocate their resources to the right priorities? Is it useful for them to challenge the government's forecasts, given you've got all these private sector forecasts out there as well, or is that just duplicative? I think that's a good question. I'll leave it at that.
Mr. Ferguson.
Thank you, Mr. Chair. So I guess maybe what I will do is refer you to the Consolidated Statement of Operations, which is on page 2.5 of Volume 1.
Members want to flip their 2.5 Volume 1, yes?
So this is the Statement of Revenue and Expenses. So if you look at the line about halfway down the page called Total Revenues, you will see that the actual revenues were about $6 billion higher than the budget. If you go down towards the end, the line that says total expenses, you will see that the expenses were about $6 billion lower than budget. So the difference between the 29 and the 17 was $12 billion. Six of it, half of it was on the revenue side, half of it was on the expense side. When you look at the revenue side, you see particularly corporate taxes make up most of it. So corporate taxes were $42 billion 216 million compared to a budget of 37 billion 877. So most of the difference is in corporate taxes. Then if you go down to the goods and services tax, you'll see that that was about $1 billion above budget as well. So, you know, those are sort of the reasons, and finance can tell you sort of the economics behind, you know, why there may have been more corporate taxes, why there may have been more goods and services taxes. If you go down to the expense side, again, expenses were $6 billion below budget. $4 billion of it was on what is called the total program expenses, and $2 billion of it is in the public debt charges. Okay, so there was a $2 billion positive on the public debt charges. Again, I think we had the conversation earlier on about the fact that that the government spent less on essentially interest on its debt than it originally thought. Sometimes, remember, what happens is debt may have been issued in 1 year many years ago at a certain interest rate, and now it gets refinanced, and it gets refinanced at a lower rate than it originally was issued at. So even though in the year interest rates may have gone up, if you're refinancing debt from a higher rate to a lower rate, then that can affect the interest expense. So again, a couple of $1 billion is in the public debt charges, and most of the rest of it, I think, is primarily in the other expenses, the departmental spending. So if you just go through those numbers, it gives you the idea of where those differences are, and then I think sort of the reasons for that and whether whether those estimates are appropriate. I think Mr. Matthews has addressed, and perhaps finance can address.
Mr. Rashan?
I would add to that if you're comparing the 29 to the 17, so that's roughly a $12 billion difference. 6 of that actually relates to a contingency reserve that was included in the 29, because that was a forecast that was done in March 2016 at a time when the economy was weak. Oil prices were around $25, if I kind of go off memory. And of course the economy recovered quite nicely and has recovered quite nicely. So the combination of not needing that amount of contingency plus a stronger economy as things evolved meant that the overall deficit came in much lower than projected.
On the contingency fund, can you explain to us and to Canadians what method was used in order to determine the contingency size, the
Sure.
actual $6 billion?
Right. Well, we've traditionally included a contingency fund of about $3 billion. $3 billion, in relation to combined expenses and revenues of about $600 billion is actually quite a small buffer in the grand scheme of things. From at different points in time, the department and the government has chosen a contingency reserve that of different amounts. In some years, the contingency has increased over time. Frankly, it was a subjective assessment, given the weakness in the economy, that a larger contingency was appropriate at that time.
Thank you. We'll now move to Mr. Lefebvre. Mr. Lefebvre, you have 5 minutes.
Merci, Monsieur le Président.
Mr. Chair, thank you once again, everyone, for being with us today. As my colleague, Mr. Christopherson and Ms. Shanahan were saying, when we go to meetings, people often tell us how proud they are of the Canadian Public Service, and we're really spoiled to be so well supported. For 19 years we've had a clean opinion So our public service deserves a lot of credit. However, Mr. Ferguson, in your speech in the beginning, you mentioned 3 points: pay administration, the discount rate, and the national defense. So we already talked about discount rates and national defense, but we did not talk about pay administration yet. This subject is one that you studied in depth. In your document, you mentioned that there was more than 60,000 hours of staff's time on this for this year's audit. And Mr. Ferguson, in paragraph 13, you say that even though the accumulated error was not significant, the extent of the errors that affected involved and the time it takes to correct errors in pay are unacceptable. I understand, Mr. Ferguson, that in November your performance audit will be published, so I don't want to compromise this report. However, I would like to hear what you have to say about the efforts that have already been made on pay administration. This is a unique situation. We've never happened in the past. Why did you make this audit, and how can we make sure in public accounts here that going forward people will be aware of the situation? Thank you. In our observations, we indicated the problems and the challenges that we noted during our audit of the financial the government's financial statements. And the objective of our audit is to give an opinion on the financial statements. So with this type of audit, our goal is not to identify all the details of all the issues. It's simply to give an opinion on the results of the financial statements. So it's in our performance audit that we give all the details on the efforts that were made by the departments to try and solve certain issues. So here in our observations, you'll see the highlights about each of the problems that we identified. As I mentioned, we examined roughly 18,000 pay transactions throughout the year for 243 or 46 employees. So we did a lot of work to understand the problems. But the objective of this audit was not to identify the efforts to rectify the situation. We will be making comments on the efforts to solve the problem in our performance audit. Thank you. On another topic, my colleague Ms. Shanahan mentioned, and I'm going to move into English because the book is in English.
We talked about the lands and buildings and how you guys account for that. But when we talk about just on the buildings, I know we look at net book value, and that's how on the accounting cycle, that's how we look at them. However, is there anywhere that we actually have determined the inventory of buildings that we have that the federal government owns across Canada, and basically what they are worth? I know we look at, for accounting purposes, we look at the net book. However, in real life, they have a value a lot often in real life that is not that is more than the net book value. So, is there anywhere in any department, if it's procurement, and I'm not sure which department, that actually looks at what value do we have in assets that are actually the fair market value?
Thank you for the question, Mr. Chair. A couple of points on this one. Yes, there is a database of property that's publicly available, which shows you what we own. It doesn't tell you what it's worth or what it could be worth. Now that being said, I should flag that in last year's budget, it was announced that there would be a review of government's fixed assets, and that review has started, and it's in 3 phases.
Just very quickly, because I find it odd that we, as a business owner, I always look at myself and I'm saying, well, what am I worth? Certainly when we do a net worth statement, right? What are we worth? But at the same time, if we're always looking at net book value, a lot of times it doesn't paint the real pictures. Again, for accounting purposes, I get it, but so are you telling me that there is nowhere right now, the federal government, we don't know what our...
So,
sorry.
Go ahead. To actually ascertain what your buildings are worth is only important if you decide you're going to sell them. Yeah. So once a decision is made that an asset is surplus, we will go and get a market assessment. There's, if it's not in great shape, there's tools there's an organization we can use to kind of repurpose it. But until the asset is actually viewed as surplus under the current system, you won't see anywhere where it discloses we think this is worth X.
Okay, interesting.
Thank you, Mr. Lefebvre. We'll now move back to Mr. Deltel. Mr. Deltel.
Thank you, Mr. Chair, ladies and gentlemen. Welcome to the House of Commons. First, I'd like to thank you for being here today and for the quality of your presentations and your comments. Obviously, when we receive a pile of documents like this, we have to take it to one step at a time. So, since I am a minister of the for the Phantom Cabinet for the Treasury Board, I'd like to look at Volume 2, and my question is about the Treasury Board. So I'd like to keep this short, but let's look at the revenue section. Can we see it on page... We'll go to move Chapter 7, that'll be easier. In Chapter 7, at the bottom line, at 6.14, it says that the previous year saw revenues of 32 million, and the current year has 24 million in revenues. So when we talk about the current fiscal year, does this mean that we're looking at month per month, month by month with the previous years, or are we just looking at the current year to make sure we have the same measure of comparison? Thank you for your question. With regard to public accounts, it's the annual total we look at for the 12-month period, and this is a comparative figure. So we can compare these two figures. That's how it works for the entire year. Thank you. 12 months rather. So I appreciate the effort you make in answering in French. If you'd like to speak in English, though, that's no problem. I respect all those who make efforts to speak in French. So 32 versus 24 million. So we realize there's a lack. So if we look at the Section 7, I drew my eye because there's a considerable difference with regard to this year versus last year. So there are parking fees of 3.3 million versus 2.6 million. So people perhaps took the bus instead of parking their car. So there's a tax credit for public transportation that we had, and that's something else. But so there's 2 points I wanted to mention, 2 things that I find rather interesting. On 7.13, the 5th line, disciplinary penalties. We're looking at less than $2 million. Do you have any explanation for this? So we're talking about disciplinary penalties. I'm sorry, I cannot explain this. I could guess it, but I don't want it to hazard a guess. So we'll follow up with you after the meeting to give you the information you're requesting. What line? Yes, this line I find rather interesting, but the line that interests me the most is the one that's later. Recovery of the public health service. For the same period, we see $3.2 million, and this year we're at $156,000. So this is a sizable difference. When we talked about parking earlier, it was also a sizable difference, especially since we're talking about the health plan for the public service. So given all the problems we had with pay, do you have any explanation on this? Does it have something to do with the problem in financial management of public accounts? There could be a link with the pay system. For premiums, we have to pay for health plans.
We can verify if this is in fact a change that results because of the change in pay system, or if it's just a change in the natural cycles Sometimes there are some cycles that change from year to year. I will say for the Treasury Board Secretariat as a department, it's not a huge revenue generating department, as you would notice. There are very much fees related to being the employer for the public service, parking, you mentioned healthcare, but really the core of the department is more around monitoring other departments and agencies for their spending.
My last question will be to l'École de la fonction publique du Canada.
We're talking about revenues for the Public School of Canada, Public School Public Service. Perhaps it's a little simplistic, but do employees of the Canadian government, when they go to this school, they're already employed by the department or the Government of Canada? I think they pay to go to the school, but is it a transfer of funds between the department and the Treasury Board, or do the people have to pay for the training that they receive?
Model for the Canada School has been revisited from time to time over the years. So there was a point in time where you paid by the course. There were some other courses that were offered free of charge. The current model is for most departments, it's almost a tax based on the number of employees you have. So basically based on the size of the department, there's an amount that is given to the school. There are some exceptions to that if there's one-off training they have to do, so it is a mix. So there are some courses where you would pay, but generally speaking, it's based on the head count, and that's the way we resource the school. Paul, did you want to jump in? Okay. Sorry, I thought I saw my colleague wanting to talk, but it's a mix. But if just to give you an example, if I, as head of my organization, thought my employees needed a course custom designed, and I thought the school was the best vehicle to do that, I would likely end up funding the school to do that work. But if it's just generic training for the public service, that's based on essentially a head tax based on the number of employees.
Thank you so much, Mr. Matthews.
Mr. Nuttall and then Mr. Massey.
Thank you, Mr. Chair. I just want to go over a specific item we already talked about, but before I do that, I want to confirm my thinking is actually correct here. So the deficit came in about roughly $12 billion under what was projected. With that, there was an additional $1.9 billion in found. I'm on page 7 of your of the presentation. Yeah. So there was $1.9 billion in found dollars to make the accumulated deficit at roughly $15.9 billion. I'm going to ignore that 1.9 for this conversation. So I look at the National Research Council of Canada again, and it's close to $260 million in unspent dollars. Would that $260 million, therefore, is that part of that $12 billion that it's lower than the projected deficit was? Is it dollar for dollar, yes?
A little more complicated than dollar for dollar, so I'll start and then turn to finance. So when departments are resourced through their appropriations, which is on a modified cash basis, that's what Parliament votes on, we have to translate that into accrual dollars. So if I'm buying a tank, well, it might cost me, $1 million this year. I know from an accrual perspective, it's going to cost me a portion of that over the next 10 or 15 years. So there's an accrual translation that's made. The more important point for my colleagues in finance is they know departments are not going to spend every dollar that Parliament votes. So they build in a lapse into the overall fiscal framework. Where a department actual results differ than their assumptions, then you get a dollar for dollar pickup. But I'm not sure if finance wants to add on how the forecast for expenses.
Mr. Rochon.
So yes, what Mr. Matthews said is accurate. You recall that departments can automatically carry forward roughly 5% of their operating budget, and not always, but in most cases they carry forward something similar to that. So each year when we do the budget forecast, we do an estimate of what we think departments, the amount of money that departments have been allocated that they will not spend. And we try to update that over the course of the year by surveying chief financial officers of every department. And so although I can't give you an exact answer on your question, my suspicion is a fair portion of the lapse that you are referring to would have gone into the better than expected deficit outcome.
So when I when I look at these numbers, this department accounts for 0.33% of total expenses, and then it accounts for 2.1% of the found dollars, that $12 billion, meaning it's 7 times the value when you're comparing them. That is way out of what I would consider, some sort of norm, and I'm just wondering, how that comes to be, how we get there, that their value is 0.3% of the total expenditures, but 2.1% of the found dollars, and how we highlight that and understand going forward for next year. Because the last thing you want from my municipal background, last thing we wanted, or I wanted when I was on my finance committee there, was a continual department with a budget that continually comes in outside of what they're projecting, and then the actuals are at the end of the year. I'm not sure there's a question there, to be honest with you.
No, it's a fair question, and from time to time when that situation that you're describing has occurred, we've looked into the departmental budget and asked ourselves whether there needed to be some kind of adjustment. Having said that, I think the thing that will typically lead to large lapses will be either a large capital project that has been budgeted that will be delayed, or a new program that takes some time or more time to be put in place and to ramp up than we expected. I can't speak to the exact circumstance that you're referring to, but we're happy to look into it.
So if you could look into it for us, that would be great. And sorry, am I out of time? Sorry.
Thank you,
sorry,
Mr.
Chair.
Nuttall.
I'm
sorry, Mr. Matthews.
Quickly
yes,
on that, the lapse of the National Research Council, just to break it down a bit, it is a split between capital and G&C dollars, so it's not just one thing. There's 2 things happening there. Going from memory, National Research Council is not what I would call a serial lapser, where you have huge lapses year after year. So it would be a good question to ask what was different about this year, and we will do a follow-up. There are other departments that are on the serial lapsing list, infrastructure, and we can explain why that is, but this sounds a bit unique.
Thank you, Mr. Matthews. Now, I think Mr. Messé, as far as I know, has the final question of the day, and so Mr. Messé, please.
Merci, Monsieur le Président.
Thank you, Mr. Chair. Mr. Ferguson, you've sparked my curiosity in your report and in the comments section with regard to the financial audits for 2015-2016. On page 7, under financial information, Crown Corporations, in this section you say that financial information for Crown Corporations is included in the Public Accounts of Canada, even if it represents an insignificant portion of this government's activities. I'll give you 2 examples. For example, Red Light Terminals, Inc. and the Royal Mint both posted unusual losses of a cumulated value of $165 million. They had difficult circumstances which led to this loss, but in the next paragraph, it says that there are very heavy losses for these Crown Corps, representing roughly 1/3 of the net value of their capital assets. Should we be concerned about this, and what can we do to make sure that these losses and the relevant information from these agencies can be rendered public, made public? All of this information is public. It is in the financial statements of these organizations. But what's important is to understand that there's more information available. All the information is not just in the financial statements of the Government of Canada. There's other information available about these organizations. as Mr. Machu said, the various Crown Corps
results of the federal government, but they're included at a very summary level. So you don't always see the details, like the fact that these two organizations in that particular year had some unusual transactions. So in order to sort of, again, get behind the details of what's going on, sometimes you have to look at the financial statements of the organizations themselves.
Merci. Est-ce qu'on a eu de l'information?
Thank you. Do we have any information about what resulted in this losses? Were there unusual circumstances? Why were these unusual losses? And my last question, is there a mechanism in place that allows us to influence this, to make sure we get this information and take account of it in public accounts? I'm going to ask Ms. Hogan to answer that question. The losses of Crown Corps. Crown corporations cannot generate revenues on their assets.
And in this instance, they felt that there was a downturn in certain of the business lines in the Crown corporations, for example, in the Royal Canadian Mint, where they felt that they couldn't realize all the future cash flows that they thought they should from those capital assets. So the international financial reporting standards allow you to take a loss on those assets so that you better reflect your future ability to use those assets. Les pertes sont inclus dans les comptes.
Losses are included in the public accounts of Canada. It's just the way that Crown corporations consolidate them. We don't have line by line. We have one line, but the loss as itself on the assets is not visible, but it is included in the results of the government. Can we do something to improve how this information is reported? So there's something we can do. Accounting standards are respected, and this is how results should be presented. But as we mentioned in the management and analysis section at the beginning of the report, could give us more information about these assets. Thank you.
Thank you, committee, first of all, for your good questions. Also to our guests that have appeared today. We want to thank you for answering our questions. In the course of this meeting, a number of you have said that we would take the question and we will get back to you. Let me encourage you to do that, to get it to our clerk. If also you consider that a question was asked and maybe the clarity of the answer could have been better expressed, bearing in mind that we do a report on this meeting today and on the public accounts that have been published, please feel free to get back to our clerk and to answer those questions with a little more clarity as well. So we thank you for being here and for your part of holding governments to account and the transparency aspect so that all Canadians can understand, first of all, that there are those who are keeping it transparent and accountable. So we thank you for your presence today, and we will now adjourn.